Hello traders, the title of the video is how to avoid the ABCD chart pattern trading mistakes like a pro. Alright, so you may say to me, George, I don't know what is the ABCD chart pattern. And I will say to you, please go to www.stochastic-macd.com and click on the ABCD chart pattern webpage, and also on the ABCD extensions webpage at stochastic-macd.com, so you may familiarize yourself with the ABCD chart pattern. There are many variations of the ABCD chart pattern, and at stochastic-macd.com you can start mastering the ABCD chart pattern. All right, so how do we avoid the ABCD chart pattern? In theory, so this is I draw my chart A, B, C, D. This is the shape of the ABCD. In theory, this is the point A, this is the point B, this is the point C, this is the point D. In theory, the distance from A to B, in theory, is equal to the distance from C to D. This is C to D. That's in theory. Sometimes we have what we call the ABCD extension, when the distance from C to D is different from the distance from A to B. So there is no equality between the AB and the CD. So check out those web pages so you may understand more about the ABCD chart pattern. Here we can see we have the A, this is the point A, B, C, D. All right, but you can see the A, the point B to C is a consolidation right here. Traders sometimes will put when they will use the distance between the A to B, that's the distance here. They project it here like this, so their target will be the orange line here. Because of the consolidation here, other traders may put it on top of the consolidation. So if you put it here at the point C, all right, your target will be the orange line here. But if you are putting it on top of the consolidation, because we have a consolidation here, your target will be somewhere in the zone of $130 level. You can see that the distance from C to D is longer than the distance from A to B, but still we have the A, B, C, D chart pattern. All right, how do we avoid the ABCD chart pattern trading mistakes? All right, the first thing that we need to do when the ABCD chart pattern is completed, at the point D, here we have D that are called delta, we want to monitor the candlestick patterns here. You see here we have a bearish engulfment, and also we have a shadow here, which means the price went up a little bit more, but there were orders here to sell and people sold it down. So this bearish candlestick bar is alerting us that there are sellers in this zone. All right, but because this candlestick bar is a little bit long candlestick bar, how do we handle that? Professional will draw the line at the low of that long candlestick bar, and also at the high of that long candlestick bar, and they would like the price to rally up into the median line of the range of that long candlestick bar. So the median line is the line that I'm going to color now into orange. All right, so we will be saying to traders, priority to bearish signal below the level of 154, and the priority to bearish signal, priority bullish signal above the level of 154.67. So what we are looking for now is that the price to rally up to the median line, and we want to monitor one more time whether there is a demand to sell it near the median line. But if it breaks above that median line of the range of this candlestick bar, which is the signature of the first sellers. If you find a support above the median line, we give priority bullish signal above the median line up to the high of that candlestick bar. So the reason why this candlestick bar is going up, is bullish, is because the professional trader want to retest the median line of that long candlestick bar. But in order to avoid the ABCD chart pattern trading mistakes, we want to combine the ABCD chart pattern with other good reason why we should sell or buy at the end of the ABCD chart pattern. So talking about the end of the ABCD chart pattern, we are talking about at the point D where we start seeing weaknesses like here. Alright? Another thing, now we see a bit of weakness here. Now if you want to sell, we want to sell near the median line here. That would be a better place. Or below the low of this candlestick bar, which means break below the low of that long candlestick bar and find a resistance, and then we take it down. But there are other things that we need to pay attention to. So we are using first the candlestick pattern at the point D to help us to avoid the ABCD chart pattern trading mistakes. Another thing that we can do to avoid the ABCD chart pattern trading mistake is to go into the mind of area wave traders. All right? So area wave traders, so that are counting area wave, they will say this is the first wave, this is the second wave, this is the third wave, and if there is no area wave violation, they will be expecting the fourth area wave, followed by what? The fifth area wave. So very often, those who are trading the ABCD chart pattern sometimes get into trouble because they do not understand the area wave trading. Therefore, as the price is pulling back like this, they think that it's going to go down more, and the area wave trader will take them out of the trade as the fifth area wave is underway after the fourth wave. So be very careful. If you see the ABCD chart pattern like this, and the price is pulling back at the point D, if the price, you need to be very careful when you are selling here. Be aware of the area wave traders that may be counting their wave and thinking that 1, 2, 3, you are selling at the point D, price is pulling back, you think that it's going to go down more, but area wave trader think that there will be the fifth area wave. And if you are not aware of the area wave trader, you may get into trouble as the fifth area wave is underway. So first thing, to avoid ABCD chart pattern, check the candlestick pattern at the point D. Second thing, go into the mind of area wave traders. As you are selling at the point D, be very, very careful as the price is pulling back. So the area wave traders will do something like this. You see so you see, they will say first wave, second wave, and third wave. Nothing can stop those area wave traders to place on their chart the pitchfork tool. So you may say to me, John, what is this pitchfork tool? And I will say to you, go to www.dayprotraders.com or subscribe to the Day Pro Trader YouTube channel. Check the playlist about the pitchfork tool. So you can YouTube search, pitchfork tool trading playlist by Day Pro Traders YouTube channel, so you may learn more about the pitchfork tool. So those area wave traders, as they count this one, first wave, second wave, and the third area wave, you as a ABCD chart pattern trader, you want to sell here as the price going down. Place also on your chart the pitchfork tool and be aware of the area wave trader, because as the price is pulling back to retest the edge of the pitchfork tool, some of those area wave traders will be counting this move down as the fourth area wave, and they will try to buy on the edge of the pitchfork tool. Be also aware that if the price go inside the pitchfork tool and come near the median line of the pitchfork tool, there will be buyers here, and this will also help you to avoid the ABCD chart pattern trading mistake. The opposite is also true in a downtrend when we have the ABCD chart pattern, and we want to sell, we want to buy at the point D in a downtrend. All right, be very, very cautious about the area weight traded. Monitor the candlestick pattern and be aware of the area weight traded. Place the pitchfork tool on your chart. Watch when the price retesting the top of the pitchfork tool in an uptrend. Watch when the price retesting the low of the pitchfork tool when we are in a downtrend. All right. The next thing that can also help us to avoid the ABCD chart pattern trading mistake, we can use the Fibonacci extension level. If you look carefully here, as I apply the Fibonacci extension to the A, B, this is the point A to B, apply Fibonacci extension to that, you want to highlight the breakout Fibonacci extension level. What are the breakout Fibonacci extension level? The first one is 161.8% level. That's the target for traders that are using the length. You remember when I was placing the length of the AB at the point C, our target was the orange line. That orange line is corresponding to the 161.8% Fibonacci extension level. So the Fibonacci extension breakout zone are 161.8% level, the 261.8% level, and the 361.8% Fibonacci extension level. As I apply the Fibonacci extension to the A to B, you can see that, all right, the price went to the 161.8% Fibonacci extension level. Look carefully here. This 161. This is the correction. So the 161.8 is the first target, which is the orange line here. The price breaks above, retest, and went up. We are now at a 261.8% Fibonacci extension level. See here, I color it now into pink. So if the ABCD chart pattern is ending at 161.8% level, 261.8% Fibonacci extension level, or 361.8% level, all right, we need to be very careful, because we will be giving priority to bullish signal above those Fibonacci extension breakout zone. So if you are here and you want to sell, you need to be very, very careful. All right, suppose you are here, you say, all right, the ABCD chart pattern is a variation when the C to D is shorter than the AB. So you are ready, you see, it's also at a target level as you measure the length of AB. So you say, all right, place it here, you say, all right, this is the point D. Now you are getting ready to sell. But if you monitor the candlestick pattern here, you can see that there is no weakness here as such, you see. So that's why we need to check the candlestick pattern. We need to check the candlestick pattern, monitor the candlestick bar at the point D. That's the first yes or no. All right. Now we want to go into the mind of a Fibonacci area weight traders. Third, we want to watch the 161.8%, the 261.8%, and the 361.8% Fibonacci extension level. So here, if you did, okay, recognize a weakness, talking about the candlestick pattern, we see a bearish candlestick pattern here, you want to sell, understand that if it breaks above the 161.8% level, there will be bias because it's a breakout zone. Now we are at a 261.8% level. Here we did not, at 161.8%, we did not see any weakness as such, all right, apart from this doji here, no much. All right, but here we see a proper weakness. This is what's happening here. But we need to be aware of the breakout zone, because if it goes above the 261.8% level and find a support, game on. There will be bias above that level. So those are the three things that we can use to avoid the ABCD chart pattern. The first one is to monitor whether we have a stochastic pattern at the point D, whether in an uptrend or downtrend. All right, look for the candlestick pattern. Okay. The second thing is to go into the mind of a area weight trader. Push your pitchfork tool on your chart, because those area weight traders, as the price pulling back from the point D, they will be seeing it as the fourth area wave, expecting the fifth wave. The third thing that can help us to improve or avoid the ABCD chart pattern trading mistake is to watch the 161.8%, the 261.8%, and the 361.8% Fibonacci extension level. If the point D is at 161.8% level, or 261.8% level, or 361.8% level, is critical to monitor the candlestick pattern carefully. Understand that a breakout can occur above any of those three Fibonacci extension breakout key levels. All right. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. All right. If you want to learn more about the ABCD chart pattern or the ABCD chart pattern extensions, go to www.stochastic-macd.com. Take time to watch the video, to read everything, put them into use, practice text until you master it. All right. So those are the three things that can help us to avoid the powerful, or what I like to call, how did I put this to trader before? Okay, the money machine, okay, ABCD chart pattern trading mistake, to avoid the ABCD chart pattern trading mistakes. All right, so this is the end of this tutorial. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. I want trader to let me know in the comment section whether the volume for this video was good or bad. Let me know, because I worry I haven't set my volume high when I start recording. If the volume is not very high, let me know in the comment section. Try to play it on your mobile phone, on your smartphone, and also on the desktop. See whether it's working better on the desktop or whether it's working better on the smartphone. Let me know. Compare both some and let me know in the comment section. I will appreciate that very much. By the way, if you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another blah blah blah, okay, please let us know by giving us the thumbs down. But if you think that this is an essential tutorial, all right, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about how to avoid the ABCD chart pattern trading mistakes like a pro. When we see a trading setup at the point D, it is very important that we use a different time frame trading method. This is about trading like a pro. Happy trading to you all, and speak to you soon.